Hello and welcome to Moneycontrol. You have tuned into IPO Watch and I'm your host Nikki Mirchandani. Today we are going to be talking about Protean eGov technologies which has hit the primary market today. A book build issue which is apparently being offered in a price band of around 752 per share to 792 per share. The company intends to raise roughly around 490 odd crore and it's an OFS only IPO that we're talking about. A bit background about the company. It is an IT-enabled service company, but to know more about the company's business model in terms of the financials, in terms of the strategy, we're being joined by the managing director and CEO of the company, Suresh Sethi, who's here on the news law with us. Thank you so much for taking out the time and having this conversation around with us. Let's straight up ask your business model, a little simplified way. You are an IT-enabled services. Also, you have an account aggregator license. What are you offering right now? How do you intend to diversify going forward? A bit about that.
Sure, Nikki. Thanks for having me here. As you rightly said, we are an ITES company. We provide products, services, and solutions. Our large contribution till date has been in the space of digital public infrastructure for the country, and that is what we have been contributing towards. We started our journey way back with our first project in the space of taxation, where we built the tax information network, and we also got the mandate for PAN card issuance. And today, as we speak, we almost have a 66% market share for all PAN cards issued till date. And we also host the national PAN database. So any financial institution which today wants to, say, open a bank account, they need to do a PAN validation. And that is where they ping into our database and we provide the authentication service. So taxation is a large business for us. And under PAN issuance, again, it's the consumer who pays for it. And over there, we actually do a business where you are doing any PAN card issuance, any change in the demographic details, and likewise any sort of reprint of PAN cards. So taxation is a large business for us. The other area we contributed in a significant manner was in being the first central record-keeping agency for the National Pension Scheme. This was way back in 2009. We today run a licensed business as a CRA, and we have a 98% market share in the NPS space. Similarly, the Atal Pension Yojana, when it was launched under the Jan Dhan Aadhaar program, then APY was again hosted on the same CRA infrastructure, and we today have a 100% market share in that. So pension is our second large business. The third area we play is we provide services on the back of Aadhaar stack. Any sort of eKYC, e-sign, e-authentication, authentication and KYC services to the BFSI sector at large. We are one of the only companies in the country which provide all the four identifiers within the authentication and KYC space, which is eKYC, e-sign, e-auth and online PAN validation. So that largely constructs our current three large businesses. Other than that, we are today expanding, and as we look at the government's thrust to create national open digital ecosystems, we are today creating infrastructure, contributing towards it in 5 sectors of the economy. There's digital commerce and mobility, where we are powering the ONDC network. Similarly, we are there in agriculture, health and education. As you said rightly, account aggregators. So we want to do a vertical integration on our identity services business, where we are getting into end-to-end provision of digital onboarding services and at the same time providing analytics and data analytics services on the back of the account aggregator license that we have, working with the parent company, because account aggregator is a separate subsidiary as required by the regulator. And then we are launching a third business in the space of cloud and infosec services, which again has a strong adjacency to our strength of managing data at a national scale for the last 20 years plus. And this entire 6 verticals we intend to take global, because a lot of countries in the developing world are at the same stage of evolution as maybe India was a decade ago. So a lot of projects on national identity, on taxation, social security, and that is our area of interest for us, where we can take the India e-governance stack global.
I'm gonna touch base all of that step by step and in probably more details, but essentially sticking on to the moot point, how different is your business model as compared to the other IT-enabled service providers and also someone like CDSL Ventures, KFin Technologies, SIFI Technologies? What is your USP? How do you differentiate yourself?
So we find ourselves pretty uniquely placed, Nikki, because When we look at our individual lines of business, we will find one or two players over there as you may be competitors or providing similar services. But when we look at the entire stack of these 6 verticals that we've in a way built our business model around, we find ourselves pretty incomparable in the market. As a company which has been contributing successively to new age digital infrastructure and getting into multiple sectors, we see ourselves pretty unique in that manner.
Let's just shift our focus now, conversation, to the revenue split that you have. 3 segments until now, and you said the 3 goes expands to 6 of them. And of course, we're not talking about your international foray that you're expecting. But let's talk about your revenue model. Transaction fees has shifted from 75% to 79% in 2023. So there is a bit of increase there. Account maintenance has dwindled from 25% to 21% in the last 3 years. What service classifies as transaction? What service gets classified as account maintenance? And why are we seeing this mix? Do you intend to further bring this down as you get in more segments?
So see, our lines of businesses today are all B2C, B2B and B2G. But most of the services are transactional. So for every PAN card issued, we earn a transactional charge. So that is under the taxation business. Under our pension business, we have an element of annuity, which is the AMC, and an element of transactional charge. So when you're opening say a national pension account, we get paid for every new account opened, but we also get paid for the total active account base we have at the end of the year. That contributes to the annuity. Other than that, all our businesses, if you see, are all in the nature of transactional businesses. The entire identity stack is transactional, which is a B2B business, where we provide services to the BFSI sector, to capital market participants, to other fintechs, and it is all a B2B service. For any authentication or KYC service consumed, you get a transactional charge. So majority of our business is transactional, and there's an element of annuity which comes from the pension business.
Point well taken. Let's talk about your revenue CAGR. It's roughly around that 10 to 12% thereabouts in the range in the last 3 years. Do you intend to further scale up the momentum as you introduce more segments? Do you intend to outperform? If yes, or what's the kind of run rate that we can look at, or just say CAGR over the next 3 years, if not for the immediate future?
So Nikki, our existing businesses are providing a lot of infrastructure services. So as you rightly called out, the CAGR is there, the growth is there in the company, and we see significant headroom for growth even in our traditional businesses. Because the PAN market, for example, is not a saturated market. Anybody opening their first bank account or coming and getting their first job will then need a PAN card. So today, cumulatively in the country, we have only 68 crore PAN cards issued. And with a young population, people coming into jobs, we see this going to be going on year, and that's what we've seen historically, and industry report talks about 6 to 7 crore PAN cards getting issued year on year going forward. Pension, again, we are an underpenetrated society, so there is significant headroom for growth, whether you take the Atal Pension Yojana or you take the NPS. And likewise, ID services are very much aligned with the digitization of India, where this is very much at the foundational level. The new lines of business we are getting into, as we are building the vertical stack, we are finding that there's a lot of value-added services that we can provide, be it on data analytics, be it on UI, UX, end-to-end digital onboarding journeys, and in the new ecosystem where we are providing buyer and seller technology, say under ONDC, that is value-added services which are naturally more margin and more value accretive. So we see that new set of businesses giving us further push into higher margins and higher values.
Coming back to the question, do you think you're going to be outdoing the 11% growth? And if yes, then what's the number going to look like for the next 3 years? Because you're also pouring in international markets, you're also venturing into new segments. So can a 20% growth look like a very feasible target, given that you're also powering in ONDC and likes of that? So is a 20-25% growth number looks very aggressive for a company like yours?
I will not be able to comment on any numbers. All I can say is that as we get into more value-added services beyond, commoditized services at an infrastructure level, definitely these are more high-margin businesses to the differentiation and value you create over there.
So, no guidance given on the number front. Would you expect to sustain the momentum or outperform the momentum? Let's put it that way.
So I think the combination of the 6 verticals is going to add additional value to the
Which is
company.
outperformance coming in as compared to if you've done earlier. 6 verticals, that's just a simple math. Six
an
verticals,
expansion.
international for it. So we are looking at a number which is about that. Okay, the company's profit essentially has declined by 25%. Correct me if I'm wrong for the previous year. What explains that? What has led to the decline in the bottom line? And what can be expected going forward in the next financial year or the ongoing financial year?
So Nikki, we had a strong growth trajectory only. Last year to this year is explained by the fact that we had a one-off exceptional item last year where we did a sale of a large asset, and that was the number which skews it. Otherwise, it's been a growth on our regular operational lines of revenue. The other area which has happened is that over the last 2 to 3 years, with most of the impact being seen last year, we've actually invested very strongly in getting a team of full stack engineers which are experts in open source digital ecosystems. We've got again sector specialists as we move into other sectors beyond BFSI, be it digital commerce, be it agriculture, be it education. So these people investments are the second item which has been a one-off expenditure in building these teams, and our employee expenses have gone up almost 50% between FY22 and 23. So other than the one-off asset that we've sold and the employee expenses, otherwise on a top-line basis, the company has shown growth.
Yeah, that's pretty much feasible and also visible on your P&L. But just in case, because there is a decline, what is that sale of the large you said that you're talking about, which has led to that one-time loss? How recurring is it in nature? And also, given that you think you're not going to come back with growth numbers in this financial year, because we've seen a decline there. So do you expect a growth?
So let me again clarify. The sale of the asset was not a loss. The sale of the asset led to an increased profit last year, right? Because this was a one-off. So this year we've grown. This year overall we've grown. The revenue has grown. But the profit numbers, if you compare between FY22 and 23, the 22 numbers have that single asset also included in the profit. And as a result, it's showing an abnormal high. Whereas this year is a normal growth without any exceptional items. And on an overall basis, our operational revenues have grown every year for the last 3 years.
Yeah, the top line growth is pretty visible. What I'm really focusing on is the operational performance and the bottom line.
Growing, except that last year was a blip because of the single asset sale, which was a data center we had sold, and that was the blip which was caused over there.
Okay, so what is the revenue? What is the kind of normalized growth rate one can look at in terms of profitability?
So if you see our last 3 numbers, they are pretty indicative over there. So as you said earlier, we are looking at growth rates which will continue from there, and our new lines of business will give. FY23
numbers can be normalized for the rest.
FY23 is, let me put it differently, it's not a decline. It's an abnormal year because of a sale of a data center.
Point well taken there. Also, let's talk about your expansion plans, organically as well as inorganically. Do you have any targets lined up? That's one question that I'd want to ask. The other one bit is, now you are also, going international in international markets. What kind of geographies are you targeting? What kind of revenue mix changes from domestic to international, say in the next 3 years, if not for a year? Let's just have a little more longer term perspective with that. Your assessment.
So, Nikki, the company is very securely placed. Our business model is very asset light. We get positive cash flows every year. Actually, the company has been getting positive cash flows since 1999, and we have been debt-free since 1999. So the company has reserves for us to be able to invest in our new businesses out of our own funds. And that is where we are always keeping eyes open, whether it is organic or inorganic growth we can do to go faster to market. So the company is open to that, and we have the funds to be able to secure that sort of, investments. In terms of overall perspective, we are looking at international businesses. It's been early for us at this stage. It's been a work we have done over the last 3-4 quarters, and the focus is largely on the developing world, where there are a lot of countries which are at a stage where maybe India was around a decade ago, and they're looking at national ID projects or tax projects or social security projects. And the interest is to look at the India's DPI story, which has been now very successful, has had very successful outcomes, whether it is at the national ID level and the inclusion which came as a result of it. And that is where we are trying to take the India stack global of e-governance services and see what we can offer in these markets.
So how does the revenue mix shape up in the next 3 years? Are you looking like a 50-50 sort of a mix from your international markets and domestic markets? Some picture of what kind of growth are you really targeting from the international markets?
So in the international market, there are a lot of opportunities. I will not be able to again put any forward-looking statement on numbers.
Just a mix. It's just
Yeah.
understanding what kind of foray are you looking at.
No, but these are.
And to go, which are the geographies essentially?
Put it a lot of interest in, say, Africa, Southeast Asia, a lot of the developing world over there. The second part being, as I look at the other vectors on which we are growing, whether it is a multi-sectoral investment into open digital ecosystems, if you look at it, the potential is huge. Today, when we look at retail commerce, it is in low single digits in terms of penetration. So we see a huge upside in terms of the market opportunity which is out there. And I think some of the initiatives that are happening at a very digital infrastructure level are going to be transformative going forward.
So you've laid out the geographies that you'd be interested in. Is 50-50% looking too aggressive of a plan, or are you going to start off with maybe a 20% number in the first 3 years and then scale it up? What's the intent out there?
I would say that the areas we've chosen are having strong adjacencies to our strengths. And these are the areas which again we see as huge market opportunities, looking at the market which is out there.
Answering the question, is it?
So we see huge opportunity because it's the macro numbers which speak for it.
Domestic?
Sorry?
Better than domestic markets in terms of
Domestic
opportunities?
markets, again, see, India has a huge potential for more digital infrastructure creation and creating interventions in multiple areas. I think our success today is largely on national ID. It is in the space of payments. India is today having a world-class payment architecture for real-time payments, and systems like UPI have made it happen. Now we are seeing a similar thing. If it can happen in digital commerce, it can happen in education, it can happen in agriculture, and that is the upside we are seeing going forward by contributing to the digital public infrastructure.
So give me a revenue split of how much of your business comes from government agencies, how much from the private space. If you can just give a split, it will really put some perspective as to how does the company intend to move forward also within that.
I explained to you earlier, the business model is largely transactional, and our businesses are all three segments: B2B, B2C, and B2G. So our revenue pools actually are more B2B and B2C. Because under the tax business, for the PAN card services, the consumer pays. Similarly, all ID services, we get paid by the businesses. Only under the national pension scheme do we have an element where the government pays us. These are for wherever government employees are pension subscribers, the government pays. If there are corporates with NPS scheme, then the corporate pays. And if it's an individual who's opened a national pension account or an Atal Pension Yojana account, the individual pays. So our government revenues on an overall basis is not more than 15%. The rest comes from consumers and businesses.
Also, just highlight about the IT spends, right? Because they have a bearing on the government contracts, if at all, or you think it's completely agnostic? Just 15% of your revenues essentially are tapped from government agencies. So even if that is agnostic, I'm assuming that the remainder part will have a bearing on your financials, right?
So see, the IT spends largely one side is the creation of the infrastructure. So a lot of the businesses we are in, we've invested. And these are businesses we created, say, in 2003, taxation got created, then pension started in 2009. So a lot of the infrastructure investment is done. And as, these databases grow, the business scales, you naturally put incremental investment over there. Our larger spend, all these businesses are asset light. Our new lines of businesses, we are working on open source technologies. So our largest spend is in the people. So as I mentioned to you earlier, where you see our profitability blip happening last year, and one expenditure also was the people expenditure. Between FY22 and 23, we have almost a 50% increase in our employee spends. And that is something we believe in the last 3 years. We have been able to invest in building a very strong team, both from a full stack engineering perspective with open source technologies and from a product design and sector specialization. Putting these together, I think this is a good accelerated investment ahead of the curve, and this should see us through in all the stacks that we are going to create going forward.
Well taken. The last question, perhaps, or let's just say second last question that I have is you have powered an ONDC, which of course the whole market knows, and it is a technology. The company is the technology enabler for ONDC. What what percent of your revenues come from ONDC? What's the growth prospect for ONDC, and what kind of scalability and revenues do you see from ONDC?
ONDC, again, as I mentioned, is something, as you've seen, it's a transformative, you know, uh, transformative intervention in the space of digital commerce. There are multiple categories getting introduced on ONDC, right from digital commerce to open finance to a lot of other things, mobility coming on top of ONDC. So as a potential, naturally, we see that this could be a huge, multiplier going forward. Looking at the current retail penetration, it's more like there's a lot of opportunity in the space. For us, it's been an early play. At this stage, naturally, it's a very small because at this stage, it would be a small number because today, see, because our larger contributors are our existing businesses. ONDC is at an early stage.
From ONDC in the next 3 years?
ONDC, that's the point. That today, from a macro perspective, there's so much intervention which can happen. And where do we see ourselves? We see ourselves at the infrastructure level. So we've created the network, and any transaction happening on the network will, down the line, see the market participants paying for use for the network. And the second part comes is in the consumer tech that we are building, whether it is building adapters to plug into the ONDC network or building the buyer and seller applications, which is a SaaS model. And that again is a play we see where there are a lot of players today, but we compete over there alongside the other players. So we see a two-layered model in terms of the revenue pools coming out of ONDC down the line.
Yeah, the street is pretty optimistic about ONDC being perhaps the disruptor to an Amazon. That's the kind of scalability that we're looking at. With that high hopes from ONDC, I'm sure even you will have some sort of revenue projections coming in from ONDC. Do you have a blueprint as to, are you targeting a 5% kind of revenue from ONDC or something on those lines in terms of the next 3 to 5 years?
Nikki, let me put it slightly differently here. These are new ecosystems. A lot will depend on adoption, consumer behavior, and a lot of things happen where you see inflection points in terms of adoption. So what I can say, there is more clarity today to say what can be the underlying revenue models. As I said, there could be a revenue model at the infrastructure level, and there could be a revenue model at the innovation layer level. So there is a understanding as to what sort of margins can be there over there. But in terms of giving the outcome, we'll have to see how the system grows. And it's a network play. There are a lot of things going positively for it, and there's a lot of opportunity. That is where we can sort of see the visibility as we speak.
Do you intend to even distribute financial services at any given point of time?
Yes, ONDC is today enabling also open finance. So just like we do a buyer and a seller, you can buy products and services on the ONDC network. You're also using the ONDC network to connect lenders and borrowers. So a borrower can go there, share their requirements and their data, and the lenders can then provide them possible options from where they can secure lending. So ONDC is going to leverage, and I would assume transform open finance also going down the line.
We're just going to leave it at that. And thank you for taking out the time and joining us here. Well, with this, it's a wrap. That's the management of Protean eGovernance, and that's the business model. They intend to foray more into the international markets too. But with this, it's a wrap. Stay tuned in for more. All right. Thank you, sir.
Thank you.